Well, the big banks kicking off earnings season tomorrow. On tap, Goldman Sachs, JP Morgan, Citi, and Wells Fargo. Their stocks all rising today. And RBC's top bank analyst sees big banks trading even higher on strong results, with the Treasury market trend playing a big role. Gerard Cassidy is the firm's co-head of Global Financials Research. He's a multi-year top-ranked analyst by Institutional Investor. And as always, welcome on Fast. Gerard, great to see you.
Thank you, Melissa, for having me.
So the steep yield curve, that's going to be a big boon for the banks.
I think so, Melissa, because when you take a look back in time, first, we haven't seen a positively sloped curve since 2022. And then if you go back in time, whether it was back in 2001 or in 08-09 or 2018-19, as the yield curve steepened, net interest margins expanded. And I think that's the story that is going to be the surprise to the upside in 2025, assuming the yield curve remains positively sloped. So if the bottom or the front end of the curve stays anchored between 4 and 4.25, long end of the curve is around 475, maybe to 490, that is a nice slope to the curve. And the banks don't even need to aggressively lend in that environment. It's as the earning assets roll over. Think about the yields that Bank of America and other banks have in their bond portfolio from purchases made in 2020 and 2021, when the 10-year was below 1%. Those are going to roll over into higher yielding securities, which is going to help the net interest margins, not only for Bank of America, for all the banks. So we think this is the underlying surprise potential for 2025.
So, Gerard, when you look at it, so that's your number one bullish tailwind. When you look at regulatory environment and you look at taxes, how would you gauge those? What would be the regulation that with Basel III, is that a tremendous tailwind? Is that equivalent to the steepening of the yield curve? How do you feel? What type of business is that going to bring in? And where should we look at the banks through that prism of regulation being lowered?
I think you put your thumb right on it. It's tremendous. Particularly the Basel III endgame. Last Monday, Vice Chairman Barr for the Federal Reserve, Vice Chair of Safety and Soundness, announced his resignation. Now this incoming Trump administration is going to appoint a new controller of the currency, a new head of the FDIC, a new head of the Consumer Financial Protection Bureau, and then they'll appoint another board member, maybe Michelle Baumann, to replace Vice Chair Barr. And in a speech last Thursday, the vice chair of the FDIC pointed out that Basel III endgame should be capital neutral. And if that proves to be the case, think back to July of 23 when it first came out. They were talking about capital levels having to increase 16%. JP Morgan, Goldman were talking 20 to 30%. Now it's likely to be zero. We are going to have an industry that is really heavily capitalized, which will enable them to be more aggressive in the share repurchase programs. So we're going to go, I think, from a confrontational regulatory environment that we've had for the last 3 to 4 years to one that is more soft to touch and more supportive of our banking industry, so that the banking industry can get more involved lending into the economy to help stimulate growth in this administration.
Gerard, you're in the Hall of Fame. I would never bet against you. I'll say this. So at some point, valuations matter. And JP Morgan will report tomorrow. Tangible book will be $98. It's trading $248. That's north of 2.5 times, which is levels we haven't seen probably since pre-financial crisis. I mean, can this just continue to grow, or are we running into some valuation problems?
Guy, I think you're right. There are some of the banks, and you've put your finger on the one that is the most valuable of them all amongst the biggest banks, which is JP Morgan Chase. Obviously, they've deserved the valuation from the numbers that they have delivered over a number of years. And so for them to really deliver this year in terms of stock performance, it's really going to have to come more from earnings growth rather than valuation expansion. But there are a number of other names, whether it's Bank of America in the money center space or even in the regional space, a name like U.S. Bancorp. These companies' multiples can expand because when you go back in time, and I'm not talking about the pre-financial crisis period, because that's not really fair to use those comparison periods since the banking industry has changed considerably since the financial crisis. But if you go back to that January of 2018, that was the cyclical high. And the group then traded at 1.6 times book, 2.2 times tangible, and about 12 to 13 times forward earnings. Today, we're at about 1.3 to 1.4 times book, 1.7 times tangible, and about 11 to 12 times earnings. So you're right. We've had a nice move in valuations for the group. They're higher. There's a little room to go higher, but it's really, I think the real growth for the stock prices should come from the better than expected earnings growth potentially in 2025.